Good morning, everyone, and welcome to the European crossover webinar. And we're still seeing a relatively quiet start for the morning, except for the dollar yen. We have seen that going and back off. I was seeing that come out across the squawk in reference to China making some comments in regards to the threat of U.S. and I guess I don't know if it's trade sanctions or whatever, but because caught the last bit of that in regards to human rights violations against Muslim minorities. I don't know if anyone saw that. I saw a disturbing video yesterday that was circulated, reportedly from a drone. But anyway, my point is, like I said, that's why you're seeing this quick little sell off right in here. So let me take a look in here. I was going to see if they had posted a little headline on that, but anyway, we are seeing. Let me go in and switch over. We are seeing gold move a little bit higher after a dip. Remember, if you remember, last week on Friday, we talked about potentially looking for this gold to work lower, and we've seen that, and we did just that. I mean, not a whole lot, but we did go on to move lower. I mean, even then, I think it was at 14.98, and we'd since moved down about $10. We've kind of worked a little bit higher off of that. At this point, bottoming, I'm talking about the spot. We know that the D futures trades at about a $7 premium to that. So now at 14.96 here on the spot. So talk about probably about 15.02, 15.03 in the D futures. And crude eased back a bit yesterday, but very, very quiet trading also overall. And S&Ps continue to hold up, although we just saw that dip on China making its comments in regards to those concerns that I just mentioned. And let's take a look on here. And let's go back to the main screen. Okay, we'll just take a quick look here on the cross rates. Did see the Aussie yen start to finally move up. Obviously, as the S&Ps have given up and yen is strength, you've seen it slide back below this bias chart resistance. Other than that, in a sense, a relatively quiet session overall, mirroring what we had yesterday. Let's go on and move back into the main screen here. One moment. And we just got, which really I don't even see we've even come through with it. Just came through the Italian retail sales down 0.6. As we come into the States, we do have Canadian housing starts at, and as mentioned that before, those that are new, I'm here in Texas, so my time is based on Central Standard Time. So just wind it up 1 hour later, and 8:15 Eastern is going to be Canadian housing starts. 8:30 Eastern for PPI here in the States, final demand that is, and Canadian building permits at 8:30 Eastern, and that'll be it for here in the U.S. session. So potentially going to be PPI, Canadian housing starts at 8:15 Eastern, PPI final demand at 8:30 Eastern, and 8:30 for Canadian building permits. Yeah, let's go move this all the way. And let's just go on and jump into the news. We'll get on with the morning bit because the FX news. Actually, you know what, Tish, with the FX news, because it is so light. It's just barely a couple of paragraphs. The dollar shed overnight gains as U.S.-China trade talks resumes. The dollar was broadly on the back foot on Tuesday, with the New Zealand dollar leading gainers against the greenback as a broad rally in Asian equities spilled over into currency markets, despite expectations of a trade deal relatively thin for a resumption of trade talks between Beijing and Washington this week. Market watchers attributed the move to positioning after a brief bout of volatility last week. We've had a lot of market volatility last week, and the current move in the high beta currencies is due to some unwinding of extreme long positions in the dollar, said Morton Lund. Latest futures data showed hedge funds have added to their massive long dollar positions. Against a basket of its rivals, the dollar dipped to 98.91 after posting its biggest single day rise in a week in the previous session. Marks will be keenly watching comments from Federal Reserve Chairman Jerome Powell later in the week after some weak U.S. data last week raised concerns the U.S. economy may be heading towards a protracted slowdown. The euro got a boost from German industrial output data, which rose unexpectedly in August. The single currency was up to 98.15, but remained within sight of a more than two-year low of 108.79. The Chinese firm yuan firmed in onshore and offshore trade as Chinese financial markets reopened after a week-long holiday. Australian and New Zealand dollars, whose fortunes are often linked with global trade, edge higher as some investors reduce bearish bets. It's one of the things that we had kind of mentioned in our analysis. Though dealers warned this move could fade, deepening on the tone of the trade talks in Washington. With that, we'll go on and move into the morning bid. And just got a little bit of water. My throat's still hoarse. I'm pretty much over the cold, but it's still a hoarse throat. Oh my goodness. Okay, morning bid. Big deals, blacklisting, and obliteration. Mixed messages before Thursday's U.S.-China trade talks in Washington continue to hold world markets in thrall, with Asian markets taking a marginally positive view of the outcome as Chinese markets return from a week-long holiday with President Trump embroiled in several controversies, from the sudden withdrawal of U.S. troops from northern Syria to congressional moves to impeach him. His angle of trade talks was nuanced. On the one hand, he said a deal was possible, but he also said he would not be satisfied with partial measures. A quick deal was unlikely and connected progress with Beijing's handling of the Hong Kong crisis. Without agreement this week, U.S. tariffs on $250 billion worth of Chinese goods are scheduled to rise to 30% from 25% on October 15th. Jurors about the talks also grew after the U.S. on Monday blacklisted some Chinese tech companies over the Beijing's treatment of predominantly Muslim ethnic minorities. But Shanghai stocks closed 0.5% higher on Tuesday, despite another negative close for Wall Street indices overnight. A moment. Let's see here. And the relatively positive stock market mood looks to spill over into Europe. European stocks were set for gains of about 0.25% after German August industrial production data came in better than forecast. Sterling was weaker first thing, with little perceptible movement in the Brexit standoff as Brussels detailed to London, where it sees its latest compromise proposals falling short. Britain's Independent Institute of Fiscal Studies, meantime, said a no-deal Brexit would see the UK budget deficit more than double to around $100 billion of pounds and require a swift return to austerity measures to keep it in check. Goldman Sachs said on Monday, as it advises clients to buy pounds against the dollar, up to about 130 on what it said was a relatively low odds of a no-deal Brexit on October 31st. Elsewhere, Turkey's lira steadied after weakening 2.5% against the dollar since Trump's surprise decision on Syria on Sunday night. Trump came under heavy criticism at home, even from Republicans in the Senate, for giving Turkey a green light for military incursion into the homeland of the U.S. Kurdish allies. He then warned Turkey last night that he would obliterate its economy if it committed any abuses in the area. On the European corporate front, well, we don't want to touch on that. So, like I said, we did have German and Spain August industrial output. Let's see. So let's go move into the. Let's go and move into the main screen. Well, essentially, we saw no move here in the euro, and really for most of the currencies. We're going to go on and do our bias chart nonetheless, but really no changes. I was. It's a good thing to bring up. I was going to say I was doing the bias chart, not bias chart, doggone it, the Asian analysis last night. It seemed kind of funny, but it was like no change, no change, no change, no change. Obviously, it changed with the dollar yen, but essentially that was it. Because look here, here's the previous day, and there's really no change here. What we were looking for, 1020 being the resistance. We'll spend a little bit of time and key on the downside on a pullback 919. Now that being said, as you likely do know, is Blake's out for the rest of this week traveling with his family. So I'll be covering the end of the day analysis. So that being said, I won't be doing the Asian analysis because I'll be doing end of the day, and Asian analysis would just take place about a couple hours later or whatever. So I'll be doing the end of the day business. Doggone it. I guess my head's still getting messed up with the lingering effects of the cold, but and being a bit humorous there. But I'll be doing the basic end of day basic technical. I generally do the basic technical, but do Asian analysis as we come into the new day starting at the beginning of Asia trading. But so I'll be covering that for the rest of the week as Blake will be out this week. So that being said, let's go on and try. As I mentioned, there's basically no changes what we've seen in many of these pairs. We just haven't really moved. And you're looking here at the dollar yen and dollar yen. Holy smokes, the euro dollar, and here's yesterday, and there's no movement here whatsoever. It probably goes into what Blake was talking about, is that everything was going to start to line up or get keyed up with the whole U.S.-China talks. Well, we haven't seen anything here. Let me take a look at something real quick. Oh, I thought I saw something here. So, maybe I did. Hold on. Okay. But anyway, getting back to this, you can see basically no movement here. So when we look here, let's go and take a look at the euro dollar a little bit closer, even though we didn't get any movement. We talked about the 1020, and here's that 919. And one of the things we mentioned yesterday is, hey, look, you can kind of, bebop around up to 110, a little bit over 110. The real resistance is going to come in at 1020. We're not that far from 1020 here. The same thing on the dip. We take a dip down to 960, 950, 940-ish. Same thing down here until we get down to 919. That's where the real rubber's going to meet the road as far as defending this. So when we go back to the daily here, you can see here this downtrend line right in here. And that's, if we can get a move above 1020, you'd serve two purposes. We can get not only break above the 1020, I mean, if we can get above here, above 1020, not only would we get a daily close above 1020, we'd also be breaking this downtrend line, which would be huge. And we potentially would see further short covering on this for a moment. So as I mentioned, no changes and no changes for a good reason. Well, no changes because we just didn't basically move here. You can look on the daily, but you see where the key levels are. 1020 is huge because not only we get above this level of this horizontal resistance, but also we'd be breaking the downtrend line, which would open the door, if nothing else, just from a technical perspective, for further short covering. Let's go move into the cable. Henceforth, the same thing here. What I mentioned, and like I said, I wasn't being facetious. When I said, when I was doing the analysis, it was like no change, no change, no change, no change, and essentially that was it. Look at that. Look, here's the previous day, and look, and all we've done is just barely even move just a hair. So here's the yesterday's trading, and look, I mean, really well defined trap within, I wouldn't say trap, but within one very, very narrow range. And today just gently easing back, just a hair bit. So looking at the basic, I keep saying basic technical. Looking at the bias chart, you can see the 2248, but the real support is going to come here at 2206. And the resistance right up here, 2406. And, actually we can move this down here. There you go. That's going to be support 2206 and 2406. Go back. $22.16 and 2406. We just haven't changed anything here. Now, obviously, there's some concerns as we get closer towards the end of the month with the concerns with Brexit. But at this point, when you look at it technically, we just haven't moved or changed anything. So this is going to remain the same thing here on the cable. And certainly you can see my point about no change, no change, no change. Let's go and move into the Aussie dollar. Sorry about that, folks. So you can see here, we haven't really done anything. We've moved, we've seen, well, coming into the session, into the from last week, we put in here. Sorry about that. And it's really just a dry throat at this point. Aussie is attempting to put in a bottom, closing its best levels for the week. Okay, here we go. I probably should have grabbed some coffee. It's just the water's not really helping my throat. Too late to grab some coffee now. Take a while to heat it up and all that. But anyway, that being said, so coming from Friday, we put on here from over the weekend, and that would have been, here was Friday. culminated, I should say, the week culminating with Friday. Aussie's attempting to put in the bottom, closing its best level of the week, blah, blah, blah. Well, and then yesterday we saw this pair kind of dip back a bit, just get back, but not anything of any real significance. Henceforth, the no change. And today, we're basically just negating what we did yesterday. You can see the range is very, very tight. So no changes. The key with the Aussie, almost like the euro, we need to close above here, this horizontal trend line. We have here, and it's coming in here. It's actually not quite as high as 68.09, but we've got 68.02. We'll see if we pull that from the 2 hours. So let's take a look at this. Sure enough, that's what we got it from right there. You see here? So essentially 68.09, 68.08 off 1 pip. But we'll say 68.09. And you can see here on the daily, by doing that, if we can get up to 68.09, then we can, essentially we're actually moving it to right here, we can not only get above this horizontal resistance level, but at the same token, we could break this downtrend line. So no changes there at 68.09. And then on the downside, we're looking at 67.15. Right there. I guess I'm not the only one that's sick. I just heard the squat person sneeze. Hang on a moment. Right there, 67.15. So as I mentioned, no changes here in the odd. Let's go move into the Kiwi. Well, same thing here. Once again, like I said, I hate to sound like a broken record, but we're in the same boat here. No changes. I mean, very, very, I want to say exceptionally, but almost exceptionally quiet trading here in the Kiwi. And you can see here 62.68 on the low side. On the upside, 63.58 right there. So it's just very, very, very quiet. Let's go with this. $63.58. So there we are right here. Just very, very, I mean, if you look at this, you think, well, maybe that's a 30-minute chart or, maybe a 2 hour. It's a daily chart. We're just not seeing any movement here. Just very, very quiet trading. Let's move in now to the dollar CAD. And here we go again. Very, very quiet. Now, the one key takeaway I guess you have to say with the dollar CAD, was we have not been able to get past that 33.36. And from last week, or closing out as we came into this week, it says the dollar CAD served notice to the bears with a sharp turnaround midweek, but has been unable to close above daily resistance at 33.36. You can see the importance of 33.36. Now, we can make the case that the bias chart resistance, which has held overall on an intraday basis, is 33.82. But the key level to get above on a daily close is 33.36. Now, we have the 33.82 because we've made stabs. You've seen that here with dollar CAD, and we just can't fill the bill, can't close the deal. But it's 33.36, and I didn't want to put just 33.36 here listed because, once again, it may give the idea that once we get to 36, it's all over with. But I'll tell you what we will do is we'll put here this. and our asterisks, which means that's the key. 33.36 on a close. Support is going to be 32.88. No changes there. Bear with me. There we go. So up here at 32.88, right there, with secondary support at 32.56. And same thing here with the peso. It's been after really, we were expecting a slide, but it slipped much further than what we even expected. But we're actually holding here at this 1950-ish area here in the dollar peso. And what we had from the previous day's level, it was really going to have to hold this 1947. I mean, 1944 is important, but boy, we'd already slid off quite a bit. And so it's doing a good job, and so we're going to keep this 1947. It needs to defend this 1947 here. Truly right there. You can see that coming in. I'll go on and put in a level right here. Doggone it. And I like to go on and put in my, intraday levels or bias chart resistance on the pink because it stands out much better, especially if I'm looking over multiple screens. We put it at 1961, the bias chart resistance, so a little bit of room right there, coming in right there, 61. We shall see. And the next one's going to be the dollar yen. Now, the dollar yen is interesting in the sense that we'd actually seen a little bit of short covering to the point that we thought, hey, look, we had our in Asian analysis. I said, hey, look, we have a resistance now at 778, and it looked like it may want to make a move up in here. But we've quickly faded with China making its remarks about potential action against its in regard to it taking measures against Muslim minorities. So we've seen the dollar yen, or actually the yen itself, strengthen. We've seen the S&Ps come off a bit. So then that changes in the sense that our resistance now will be, I'm going to put it right here to 750. 750. Still bearish. The only difference is on the downside. Also, we're gonna heighten this a bit. 685. You can see here we come off quite a bit, and despite the pop back or come back a little bit in the S&Ps, the dollar yen was having no part of it. It's still, the yen itself was still staying on the bid. Finally, yesterday we saw a little bit of short cover and thinking, okay, we might be able to add up. And here's where I was coming up with the 778. But with China making their remarks, we've quickly seen the dollar yen come off from those better levels, dip back. So 685 on the support side, 750 for resistance. Sorry about that, folks. And let me move into the dollar index. Dollar index is also keeping itself relatively in check. We had 99.11, and you can see right here 98.30, and I don't see any reason to deviate from that. You can see potentially on the 2-hour chart we could stretch on up to 99.30. We probably will, because once again, if you hit above 11, we're not that far away, and we could quickly tick up. So we're going to go with, we'll edge this up to 99.30. And we are going to give ourselves some leeway down here on the bottom. Tell you what, we'll move this up just a bit higher here, which is right there. 98.46, 98.46. But as I mentioned today, it's just relatively quiet trend. We do have a final but that's going to be final PPI today, and a little bit of Canadian data, building permits, and we also have at 8:15 Eastern housing starts. But as you can see here, very, very quiet trading across the majors here. We're going to go on and jump into the cross rates. Bear with me. The dog's really jumping around, really wants to get outside. So I can't, that's one thing I can't ignore, because I'm certainly not interested in cleaning up any mess. So if you just bear with me, we'll go on and get into that. So we'll get into the cross rate. So just bear with me. Actually, I'll go and put up the bias chart, but to avoid any confusion, I'll put it like this for what we've computed. And I'll be back in just a moment while I go on and take the dog out. Thank you. Okay, everyone. Thank you very much for your patience. Let's go and move on now to the cross rates. Not with me. We're trying to move up a little bit higher in the Kiwi yen. We have worked off those lows a little bit. We're still trying to push here, seeing if we can push beyond, but it's still relatively tight here. I mean, very, very tight. If you look at about here, look at this, and just basically trading within a 21 pip trading range, or maybe a little bit more than 20 pips, but very, very quiet. The resistance we do have, which is keeping in check right now, is 67.76. We're just going to move just right here. You see this level right here, which is the closing bars. That's where the real resistance is. Looks like we came up just a bit short of that. That's going to be right there at 67.94. And that key level, 67.15, very, very important level, which is held in check. And we're going to go and keep that because that's where the real support comes in, or at least it needs to make that stand. So no changes here on the support level, 67.15. Certainly still bearish. And with that, we're going to move into the Euro Yen, and we'll focus on the intraday. Well, we have been able to go on and push back beyond the 1769, work a little bit higher here. But we've since given back a little bit with the yen strengthening a bit after the China comments. You can see these touches come right across here. So that's going to be, well, let's just go right there. There's going to be the resistance here. But we may have seen the best so far. And we'll have to see how U.S.-China trade talks come about. We have managed to get above the 1769, but this is a big hurdle right here. Now, I don't want to go overboard because that's still a long ways off. You're talking about another 70 pips off. So for immediate resistance, it's going to be 1808. My point is, it's going to be a tough road to hoe to try and get the way this yen is strengthening here. And yeah, we can't basically the falling. I can't get up. You may have moved a little bit higher, but moving a little bit higher from the basement isn't saying much because you barely just made it to the first floor. So there's an initial line here, but it's going to have a tough time for the rest of the week here. Support. No changes here on the support level. I think it's important that they have to hold this area here, which is going to be, we had 1679. It's going to be right here, 1702. Right there. And just below these lows, but 1702. Obviously moves up a little bit higher in light of the, we were able to push up yesterday. But certainly still remains under quite a bit of pressure. I really don't see that being alleviated anytime soon. With that, let's go and move into the Euro odd. I'm going. Well, you can see, and I guess it's just the markings of this week. We've kept it in very, very tight range. Now we actually had 63.41, which would be focusing here on the daily. We'll go to that quickly. And you can see the importance of the 63.41. Huge level. I mean, absolutely huge. Confluencing with 63.49 to 50%. That, no changes here. None whatsoever here. We've definitely got some work to go and do. And then on the downside, obviously we're not moving anywhere from a bigger term perspective, 61.76 at this point. So no changes here. We still haven't marked off as bearish as long as we're down here. But we need to get above 63.41. The fortunes would change if we can get not only beyond 63.41, which would be huge, but also getting beyond this 50% would turn the fortunes around here for euro odd. So until then, the bias is going to remain bearish right here on euro odd. Let's go into the euro kiwi. You can see how quiet this market's gotten. And just bear with me one moment. Okay, sorry about that, folks. One dog didn't want to go out. I didn't decide to take him out, and sure enough, he goes and makes a mess. So let me just go on and wrap up with this kiwi. So in the euro kiwi, you can see the importance of the 73.09. So no changes here. You can see that is significant here, the 73.09. We're trapped in a tight range. You can see how, you can see from day to day here. But we've been all over the board. If you look over the past month, back up and down, but very tight range right now. 73.09 still remains bias chart support. And the upside 75.03. No changes there, but it is a bullish setup overall. And from there, we'll move into the Aussie yen. And look how tight that is. I mean, there's, like I said, sound like a broken record, but no changes here. No changes. 72.75, you can see down here on the downside, 71.86. Huge that they hold that on a closing basis. And that's about it. I mean, there's just no changes here. It's just very, very quiet trading. We'll go move into the guppy. We're weakening just a bit. And we kept this here because we had put 31.12, 31.40, 31.14 is a 50%. And just a level below here, 31.12. That's going to be the bias chart support. And no changes here. You can see this holding like a rock at Gibraltar, 32.06. Nothing here. And lastly, we'll go finish up with sterling on. And we have slid below this 81.82, but you can see right here, 80.89 now. 81.41 is this 38%. And you can see twice we've held that area here, 81.41. Can we, if we hit it a third time, we're probably going to take stops out. So henceforth, I don't want to just go and say, okay, it's going to be 81.41. But it is important that we hold this 80.89. That's a real line where even if those that try and push it for the stops, which they might be, some people may want to go in and get short, thinking they're going to push that. We'll go with 80.89. And bear with me. Bias chart resistance movement right there at that little tip there, 83.05. And as long as we're above that 80.89, it's going to be bearish. I'm at bearish, I mean bullish. Let's go on and move into a couple other markets. As I mentioned, we're seeing gold move up a little bit higher. We talked about it on Friday. We're looking for this market. I mean, I mentioned it. Potentially, we can go on and drive a little bit lower because remember, we were thinking Friday was going to be the big hurrah date. It was actually the day before. And so we were talking about that this market was open to pair back. And it did. A good $10. Could have been more, but I mean, we're getting a little bit of a pop, probably associated with the news out of China in regards to potential action for their treatment of minority Muslims. Crude oil still relatively weak. We may try to push up a little bit higher. Yesterday we finished right near slows, just kind of treading water on this lower end. Now you can see we're below this trend line right here, so potentially with the weakness that we're continuing to see on global markets has a possibility this could even slide further back, giving back not only giving back everything it had, but even more so, and slide potentially in the next month or so, move down with a 40 handle on it. 10-year yields are paring back down again. S&P's trying to hold this key level here, 29.33. And that's about all we have. But thanks for joining us here on the European Crossover webinar. Be seeing y'all later on at 12:30 Eastern on the FX Daily Wrap Up. Thanks again for joining us here.